Welcome to this explainer. Look, the global transition to carbon-free energy is moving at an absolute breakneck pace right now, and companies are racing to catch the wave. Today, we're looking at a truly fascinating case study in corporate repositioning, Foremost Clean Energy Ltd. They are making a massive, high-stakes pivot to capture these huge megatrends in battery storage and nuclear power. They've got a brilliant thematic setup, but as we'll uncover together, the harsh financial reality of actually pulling this off makes it the ultimate risk versus reward scenario.
Here's our roadmap for today. We'll start with the clean energy pivot, then explore the Athabasca Basin advantage, followed by leadership for exploration, the harsh financial reality, and finally, forecasts and final verdict. Let's get right into it.
Section 1. The Clean Energy Pivot, Rebranding for the Future.
Okay, let's dive right into this strategic shift. The company used to be known as Foremost Lithium Resource and Technology, but effective September 30, 2024, they officially changed their name to Foremost Clean Energy. Now, while the stock ticker stayed exactly the same, the message they were sending to the market was loud and clear. You see, they didn't want to be boxed in purely as a lithium player anymore. They wanted to signal a much broader approach to the whole carbon-free transition, essentially setting the stage to shine a massive spotlight on their newly acquired uranium assets.
But before we get completely swept up in uranium, we really have to acknowledge their foundation. Over 55,000 acres. That is the size of their portfolio of lithium projects across Manitoba and Quebec. So even with this shiny new rebrand, they are maintaining this massive footprint, keeping a really firm stake in the critical battery metal supply chain.
Moving on to Section 2, the Athabasca Basin advantage, a geological powerhouse.
To truly understand this pivot, you have to understand the Athabasca Basin itself, spanning a massive 100,000 square kilometers across Saskatchewan and Alberta. This one region alone supplies roughly 20% of the entire world's uranium. I mean, it's absolutely legendary in the mining world for hosting incredibly high-grade ore. This stuff is usually found right at the boundary where deep sandstone meets the geological basement. Basically, securing assets in this area gives any junior miner a monumental structural advantage right out of the gate.
And let me tell you, Foremost didn't just dip a toe in the water here. They secured a massive, massive footprint. They currently hold interests spanning over 330,000 acres across 10 prospective properties. That is a tremendous amount of surface area to hunt for the next major high-grade discovery, especially in what is arguably a premier global mining jurisdiction.
Now, you might be wondering, how on earth does the junior company get their hands on so much premium real estate? Well, it's through a highly strategic option agreement with Denison Mines, who are a major player in this space. Foremost has the right to earn up to a 70% interest in almost all of these properties through systematic exploration, leaving Denison with the remaining 30%. The only exception here is the Hatchet Lake property, where Foremost can earn up to 51%. It's your classic earn-in structure. You partner up with a giant, and you swing for the fences for those company-making discoveries.
Section 3. Leadership for Exploration, Guiding the Drill Bits.
Back in June of 2025, Foremost made a really crucial executive hire. President and CEO Jason Barnard was super clear about their intent, pointing out that this new expertise would be invaluable for testing high-potential targets. He specifically called out their recent success at Hatchet Lake, where they had already hit multiple intersections of uranium mineralization. Simply put, they needed a heavy hitter to take that early success and really scale it up.
And that heavy hitter, that's Cameron Mackay, who is appointed VP of Exploration. Let me tell you, his resume is essentially tailor-made for this exact mission. He brings over a decade of uranium discovery experience specifically in the Athabasca Basin, all backed by a master's in geology from the University of Saskatchewan. Throw in his previous experience at the $3.5 billion NYSE-listed Hudbay Minerals, and you can see exactly what Foremost is playing at here. They're bringing deep, hyperlocal technical expertise in-house so they can aggressively chase down these targets.
All right, shifting gears to Section 4, the harsh financial reality, the cost of exploration.
Up to now, we've been talking about brilliant setups and geological potential. But look, exploration is wildly expensive. We've got to start with a really critical accounting term that's currently hanging over them like a dark cloud: going concern. This is a formal warning issued by auditors in Foremost's fiscal 2026 statements. What does it mean? It means their financial survival is in serious doubt. Their ability to keep the lights on is entirely contingent upon securing new financing. Without new money coming in, the risk is brutal and simple. They run out of cash.
And the reason auditors issued that glaring warning becomes super clear when you actually look at their burn rate. In the prior fiscal year, their net loss sat at 3.62 million Canadian dollars. But for the year ending March 31, 2026, as they really ramped up these exploration efforts, that loss nearly doubled to 6.9 million. That right there is the staggering reality of actively exploring 330,000 remote acres.
So the crucial point here is exactly how they pay for those escalating losses. Since they don't have revenue, they have to issue new shares. In fiscal 2026 alone, their total shares outstanding shot up by 34.6%. Folks, this is shareholder dilution in action. When a junior miner raises cash, like they did with their $5.7 million bought deal in March 2026, retail investors are the ones who pay a heavy price. Your slice of the pie essentially gets watered down just so the company can keep the lights on and the drills turning.
And this intense financial strain actively impacts market sentiment, for sure. On June 29, 2026, Foremost reported a Q4 earnings per share of -13 cents, missing the consensus estimate by a penny. Now, in the microcap space, a penny miss speaks volumes about escalating costs. In fact, this mounting financial pressure was a big factor in driving a 15% decline in their stock price between March and July of that same year.
Which brings us to Section 5, Forecasts and Final Verdict, weighing the extremes.
So how do we reconcile these massive, immediate funding risks with the potential of striking a major uranium discovery? Well, check out the wild upside that algorithmic models are factoring in if Foremost actually succeeds. Data from StockScan shows some absolutely staggering long-term price targets. While the stock was hovering under $2 in mid-2026, forecasts point to $9.35 by 2030, $27.73 by 2040, and a frankly incredible $45.95 by 2050. Now, remember, these are purely algorithmic projections based on clean energy megatrends, but they brilliantly illustrate the massive reward waiting for a company that can actually ride this thematic wave.
To summarize everything we've unpacked in this explainer today, this is really the ultimate trade-off for any market watcher. On one side, you have this brilliantly executed thematic setup, shifting to uranium, securing massive Athabasca Basin acreage, partnering with Denison Mines, and landing top-tier talent like Cameron McKay. But on the flip side, that incredible potential is heavily chained to a weak balance sheet, mounting losses, relentless dilution, and a literal going concern warning.
Which leaves us with one final ultimate question. Foremost clearly has the land, the team, and exactly the right commodity at exactly the right time. But in the totally ruthless, cash-burning business of junior mining, can Foremost Clean Energy secure the funding and actually survive long enough to pull that massive reward out of the ground? It's a truly fascinating standoff, and honestly, one that perfectly defines the high-stakes world of clean energy exploration.